What's in store for 2025? In today's video, we're going to unpack what are some of the things that might impact investors for this year. So if you'd like to know more, stick around. Guys, my name's Julian. I'm the head of strategy here at Ripehouse, and in today's video, I'm going to give a bit of a prediction in terms of what I think is going to be, maybe a core theme or some things to keep an eye out for 2025 from a property investment perspective. If you're new to the channel and you haven't already, make sure you smash that like button and hit subscribe, because here we talk about property investing and finance relation into property investing. If you'd like to speak to myself or the team, just simply click the link below or hit pause. There'll be a QR code that'll pop up. More than happy to take your call. But let's get into what today's video. And in today's video, we want to unpack maybe some of the things that are on the horizon for this year. And there's constant talk each and every year, whether it's January, December, there's a bit of a narrative about what's in store for the real estate market. And we always have, bank economists come out, then we have, media experts come out and give their opinions. And I guess here I am today going to give you my kind of opinions, I guess, of what I kind of think is going to be in store for 2025. So let's get straight into it. So firstly, heard me talk about it for a little while now, and I'm probably around about, I'd say 6 months or so away from where I thought we would land. I thought we were going to be somewhere around that kind of mid to late 2024. We'd start to see rate cuts, but the new RBA governor, she stood pretty firm. She's holding the fort, just in cricket terms, just blocking, no, not getting through. But all the data is really kind of showing, and we can see all across the world, not just a rate cuts, several rate cuts coming through. Now, admittedly, Australia didn't go as hard on the rate rises, right? So that's potentially why we haven't seen those rate cuts hit us quite yet. But it's a matter of when, not if now, for 2025, that those rate cuts are going to come. And a lot of, if you speak to a lot of your higher end brokers and banks, CEOs, etc., a lot of them are kind of pricing in around about a % rate cut for 2025, and I wouldn't be surprised if we get towards that back end and start to see that. Now, do we see it in February? Don't know. We probably do need it by then, but I think what we're going to find is when they do start cutting rates, they might just go 0.25%, 0.25%. They're not going to be coming in and just making these little 0.1s, that once they've made their decision, they'll go pretty hard quickly, and then they'll just wait and see how things wash through. But rate cuts, I think we're going to see them either end of Q1, start of Q2 for 2025. So that's my first prediction in and out of the way. And then the next prediction, which ties into that, is we're going to start to see a bit of a fixed rates war. So if you're unfamiliar in terms of, I guess, from the market share perspective with the banks, fixed rates are the way that they really make sure that they they want to lock you into a deal, So they use that as their products in the market to make sure that they're capturing people in on 2, 3, 4, 5 year fixed terms. Because otherwise, they don't want them jumping from lender to lender. And what we haven't seen the last couple of years, the banks haven't really been pushing that too much because they were a little uncertain in terms of where rates were going. If we go back to say 2020, 2021, we were seeing fixed rates everywhere, and that's where people were tying it in. But now, I think in 2025, we may see stronger fixed rates come through. So we'll start to see 5, maybe mid 5s, early 5s. And for investors out there who are thinking that's a good deal, they just want to lock in, neutral gearing, potentially positive gearing, depending if they've had good rental growth on their properties over the prior years. That will be used as a tool by them to lock in market share. Do they start to bring back the cashback incentive? So during that refinancing, spike in 2022 and 2023, we saw $4,000 rewards for swapping over. They might start to bring those products back as well. Not too sure on that, but I think you're going to see intensifying fixed rate competition as well from the lending side. So that ties in pretty heavily to rate cuts. And on to the next one. So I think we're going to start to see, particularly in your Melbourne and Sydney markets, that those two markets have almost been like a bit of a standoff, where owner occupiers, whether it's first home buyers, haven't been jumping into the market, or also people looking to downsize or upsize. Those markets have been kind of little bit stagnant, and people love to feel like they're selling on a win, right? Or feel like selling on a high. So I think we're going to start to see a resurgence of the owner occupiers, and particularly in those markets. And what you'll also find, particularly more so in the Melbourne market, as somebody in the team here is doing a bit of shopping in that Victorian and particularly the Metro Melbourne market at the moment, there is some stock that's being pushed out, but that is investor stock. When you have a look at those properties, there is a big difference between properties that have been rentals for 10, 15, 20 years, and they're not really present very strongly. They may be 3-1s where most of the area is 4 and 2s, and it's not really going to attract as many buyers. Your owner occupier level stocks are very, very, very low. So though you hear a lot of the Melbourne market being talked about in terms of property prices falling, when there are quality family owner occupied homes hitting the market, they are being snapped up very, very quickly. So I think that'll get worse and worse as the year goes on for 2025. So I think those owner occupiers, and then potentially investors who are looking to see them as more of a use the term blue chip asset for them to buy into, that's going to be a bit of a resurgence for 2025. And tying into that, the emerging markets, so Victoria and Sydney, probably more so Melbourne and Sydney, those two markets have always historically been linked to lending. So, we've seen the last couple of years they've been down or stagnant, and that's no surprise. When you've got higher interest rates, people servicing has taken a substantial hit, right? And then you've got inflation, so cost of living pressures. Now, if you've got, your $2, $3, $4 million property in Melbourne and Sydney, and in 2020 you might have had 20 people eligible to buy that property. Well, if they've lost 40% of their borrowing capacity, let alone that their inflationary costs that they've got to worry about, you might lose 40% of them from your buying pool. So it comes down to a simple supply and demand thing, where you not have as many buyers eligible to come in. Now, with those rate cuts and also consumer confidence as well, people feeling like those markets may be bottomed out or they're about to drive up. There are a lot of buyers agents that I know of in the Melbourne market that are starting to buy quite heavily, and I'm sure they're doing it in the Sydney market as well. So I would be keeping an eye. I think Victoria and Sydney are going to be the emerging markets. They might not come out of the doors smashing hot, but towards that middle to back end of the year, I feel like it'll be coming home with a wet sail. So that's something to keep an eye on. And the last one, this is more of a question. I think there is the potential to see a little bit of an investor exodus from the west coast of Australia. So, particularly investors who have gone in early to that WA market. If they've started investing in 2020 or 2021, they've held that asset for 4 or 5 years, and they've seen that asset potentially double in value. They may start to just take their money off the table and then go invest elsewhere or pay off mortgages. So that's something to keep an eye on. It'll be very interesting to see what that market is doing once we get to the back end of 2025. So that one's not more of a prediction, it's more of a watch and see. But would love to know your thoughts on what's ahead for 2025. Drop a comment below. Someone will get back to you and maybe make a comment. We'd love to hear your thoughts. If you haven't already, make sure you smash that like button or subscribe. If you'd like to speak to myself or the team, either click the link below or hit pause and we'll have the QR code for you to book in a call. Guys, thanks for watching, and we can't wait to catch you in the next one. Bye for now.